So why haven't I heard about this before? And if this is so great, why doesn't everybody do this? And the other question that comes up is, how come my financial advisor hasn't told me about this? I've been working with him for years. Well, there's three great questions, and they're very valid. The first question that I would ask you is, where do you seek financial advice? Is it from the break room where your other coworkers are standing around the water cooler having lunch or going to snacks by the vending machine? Do you listen to talk radio to get your financial advice? Do you seek newspapers or publications to get financial advice? Well, there's probably a reason why you may not have heard about this in the past. If the last name of the people that you're taking advice from isn't Rockefeller or Rothschild, you may want to be open-minded to check out a century-plus-year-old proven concept, proven philosophy and system that's either used currently or was used to start major corporations like Walmart, GE, Walt Disney, Ray Kroc from McDonald's. The Pampered Chef was actually started with a loan from their insurance policy. Wealthy political families such as Franklin Delano Roosevelt, John F. Kennedy, Ronald Reagan, Joe Biden, and even the late Senator John McCain utilized a loan from his permanent insurance policy to finance his run for presidency. Why doesn't everybody do this? I love when people use language like everyone and always, because everybody else is doing XYZ, so that should probably be the way I should do it. So I'm going to answer that question with a question the way my mother would when I was little. And I'll always remember the look on my father's face when my mother would ask me, if all your friends were jumping off a cliff, does that mean that you jump off a cliff too? Well, just because everybody else is doing things differently than having an infinite banking concept insurance policy, does that mean that it's not a good idea? Well, let's stop and think about that. Are all your friends and neighbors and people that you're taking financial advice, are they going down the same financial cliff and jumping off, retiring with next to nothing, without having the proper savings, with going through life paying money in exorbitant amounts to banks, credit card companies, financial institutions, where they could actually be better off if they had the freedom and flexibility of having that liquid cash in their own bank? So if this is so great, why doesn't everybody do it? And why hasn't your financial advisor done it? Well, let's talk about your financial advisor for a minute. If you go to somebody and what they do to earn a living is sell you stocks, bonds, or mutual funds, or their expertise is giving you financial advice on what stocks, bonds, or mutual funds that you should make investments in, what do you think they're really going to tell you to do with your money? If that's what they do is sell or manage stocks, bonds, and mutual funds, that's probably what they're going to tell you to do with your money. So if most banks store their money in a permanent life insurance product, then why wouldn't you do it? Well, because the banks don't want you to store their money in life insurance products. The banks want you to store their money with them so they can turn and put it into permanent whole life insurance products and they can earn the profit. Because remember, banking and financing is a huge, huge industry. There are billions and billions of dollars that are being loaned out. So stop and think about what you're actually doing for a minute. Banks tell you to put their money into a checking or savings account, right? And they pay you what? Next to nothing, right? I mean, way below the rate of inflation. If they're putting your money into a checking or savings account and it's at 0.009% or whatever it is, and every year they send you a 1099 for that stupid little piece of paper that says, hey, you owed $30 that you got to pay taxes on that gain, you're not compounding your interest. They're actually earning money, because if the rate of inflation, depending on who you talk to, is 2% or more, and they're paying you less than even 1% or even a fraction of a percent, are you getting the raw end of this deal? Or are they making incredible profits where they're earning substantially more than what they're loaning it to you? Well, we take it for granted that that's a business, right? And businesses are in the business to make a profit. So why don't you think you should have your own banking policy? In an article by American Banker, they state that Capital One Financial, for example, spent $831 million on marketing in the fourth quarter alone. They increased their advertising budget 81% more than they spent in 2017. The graph at the bottom shows that banks are increasing their marketing budgets to reel in more deposits and leverage their investments in digital banking. And the chart shows that's a year-over-year increase. And the source they cited were the companies themselves. So how can you really compete against multi-billion-dollar marketing and advertising programs that's trying to indoctrinate you and make you want to be a consumer of the banking products and services rather than own your own bank? If it's profitable for banks, why don't you become your own banker then? How many times do you go to your mailbox and half of it is credit card opportunities, opportunities to refinance your mortgage, or if you're a business owner, you've got to be bombarded with all kinds of offers for offering you financial services and ways that you can get loans for your business. So let's talk a little bit more about why your financial advisor may have told you about this. Well, I'm going to use logic, so forgive me if this is too simple of a thought process. There's only two possibilities that can happen. Number one, your financial advisor knows all about this, but they're not willing to tell you about that. Think about that for a minute. If your financial advisor is aware of this process, but they're not telling you, and you see that it's in your best financial interest to keep your money in control and save money in taxes, save money in interest to other people, have a safe, guaranteed, slow and steady pace to grow money for retirement, then why would they tell you to do that if they're losing money? Well, the question you might want to ask yourself is, if they know about it, why aren't they telling you about it? Because if this is a system that's been around for years and years, a lot of people will even remember It's a Wonderful Life, where George goes into the bank's office and he has the cash value in his life insurance policy. Well, you want to remember that if your financial advisor isn't telling you this and they're aware of it, you might want to ask them why they're not telling you something that's in your best financial interest, and they know that. That might be a problem. Now maybe they don't know this. That could be another thing. There are a lot of brilliant minds that are very focused on one specific area. And your financial advisor may just be an expert and know everything about stocks, bonds, and mutual funds, but that doesn't necessarily mean he or she is an expert in all financial matters, especially ones that are in your best interest. Because let's think about it. Can you really call that person a financial expert if they don't know about basic financial tools? Especially financial tools that could save you hundreds and hundreds of thousands of dollars in taxes and insurance. Because remember, most financial advisors get paid one of two ways. They either get paid commissioned by all the stocks, bonds, and mutual funds that they continually trade, and there are others who get paid as a fiduciary with a flat fee. Well, let's think about both business models, and you tell me if that makes you feel comfortable or it makes you feel safe and secure as far as how you want to utilize your money. And again, I'm not saying that this is bad practice. I'm answering the question, why haven't they told you about it? Well, if your financial advisor gets paid by selling stocks, bonds, and mutual funds, and he makes less money by selling you an insurance product, it's not in that financial advisor's best interest to guide you to put your money towards something that doesn't make them as much profit. Now that's again saying that they know all about this, right? So we have two things. Either they know and they're just not telling you, which might make me maybe question maybe their integrity of why they're not sharing this information with you. Or if they don't know this information, well, then you might have to ask yourself, are they really an expert on all matters of money? Because if this is a system that's been around for 100 years plus, and even through the 80s, when it became very popular to buy term and invest the difference, where in the 80s, you could throw a dart at the wall and probably pick a winning stock. It wasn't hard to make money in the stock market in the 80s until it crashed. Until that period of time, you still would have had a financial advisor. If they've been in business since the 80s or 90s, then they should probably be aware of this basic concept. But again, many of them don't. And it might be because it's not in their financial interest and they make more money telling you to invest your money in something that has risks versus something that has guarantees. It may be that they're just not an expert on money, but they're an expert at selling people and managing stocks, bonds, and mutual funds, which isn't a bad thing, but it kind of answers that question. Is that what's right for you, to put all your eggs in the financial basket of having them at risk in the market with stocks, bonds, and mutual funds, or even if it's in real estate? If all your money is wrapped up into those areas and you don't have liquid funds for emergencies, you might be putting yourself in a situation of possible bankruptcy or a possible financial crisis later down the road. So that might lead many of you to the next question is, so how hard is it to qualify to get an infinite banking policy? And can you get pre-approved? And the answer to both those questions I'll be answering in the next video in this series. So stay tuned. In just a few seconds, the next video in this series will appear at the bottom left-hand corner of the screen. At the top left-hand corner of the screen will be the full webinar, which will answer 99% of all of the questions you have. Of course, don't forget to like, subscribe, and ring the bell so you'll be notified when I upload new videos each week. If you're watching this on a mobile device and directly on YouTube, there's a little arrow on the right-hand side. That'll open up the description below where you'll have a link to our webinar, our learning center, as well as have the ability to book a consultation with me directly to see if the infinite banking concept and becoming your own banker is right for you.